Hello everyone and welcome to our channel. Today, we're going to discuss a topic that has been on the minds of many people around the world, the potential for a global recession. As we move further into the 21st century, we are seeing numerous warning signs that suggest we may be heading toward a financial collapse that could change a generation. In this video, we'll be taking a closer look at these signs and analyzing what they mean for us all. The current state of the world economy. To understand why we believe that a global recession may be on the horizon, we must first look at the current state of the world economy. Despite strong economic growth over the past few years, there are several factors that suggest that the global economy is not as healthy as it may seem. For instance, global debt levels are at an all-time high, with many countries around the world having higher levels of debt than they did prior to the 2008 financial crisis. Additionally, income inequality continues to be a significant issue in many countries, with the wealthiest individuals and corporations accruing more wealth and power than ever before. This trend has led to a decrease in consumer spending and a general lack of confidence in the overall stability of the global economy. The trade war between the US and China. Another significant factor that could lead to a global recession is the ongoing trade war between the United States and China. This trade dispute has been going on for several years and has led to numerous tariffs and restrictions on goods and services. These measures have resulted in decreased international trade, which has hurt businesses and consumers around the world. Furthermore, the ongoing tensions between the US and China have created a great deal of uncertainty in the global market, which has caused many investors to pull back on their investments. This lack of investment has resulted in a decrease in economic growth, which could ultimately lead to a global recession. The impact of the COVID-19 pandemic. While the above factors have been brewing for some time, the COVID-19 pandemic has served as a catalyst for many of the challenges that we're seeing in the global economy. The pandemic has caused significant disruptions to businesses and economies around the world, resulting in job losses, decreased consumer spending, and a general lack of confidence in the future of the global economy. Although vaccines have been developed and the pandemic is gradually being brought under control in some regions, the impact of the pandemic will continue to be felt for many years to come. This will lead to a prolonged period of economic instability, which could ultimately result in a global recession. What will happen if a global recession occurs? If a global recession were to occur, it would have significant consequences for individuals and businesses around the world. In addition to the loss of jobs and income, a recession would likely result in decreased consumer spending, which would further hurt businesses and the overall economy. Moreover, a recession would likely result in increased income inequality, as the wealthiest individuals and corporations would be better positioned to weather the economic storm. This would lead to a decrease in social mobility and a widening of the wealth gap between the rich and the poor. Potential solutions to prevent a global recession. To prevent a global recession from occurring, it is important to address the root causes of economic instability. Here are a few potential solutions that could help. 1. Addressing global debt. One of the primary factors contributing to economic instability is global debt. To address this issue, governments around the world could work together to create a comprehensive plan to reduce debt levels. This could involve implementing measures such as debt restructuring, debt forgiveness, and debt for nature swaps. 2. Promoting fair trade. Another key factor contributing to economic instability is the ongoing trade war between the US and China. To address this issue, countries around the world could work together to promote fair trade practices and reduce tariffs and trade restrictions. This could help to increase international trade and economic growth, which could help to prevent a global recession. 3. Addressing income inequality. Income inequality is a significant issue that is contributing to economic instability. To address this issue, governments could work to implement policies such as progressive taxation, increased investment in education and job training programs, and a higher minimum wage. These measures could help to reduce income inequality and increase consumer spending, which could ultimately help to prevent a global recession. 4. Addressing climate change. Climate change is a significant issue that has a major impact on the global economy. To address this issue, governments could work together to implement measures such as a carbon tax, increased investment in renewable energy, and increased protection of natural resources. These measures could help to reduce the negative impact of climate change on the global economy, which could ultimately help to prevent a global recession. The importance of preparing for a global recession. While it is important to work to prevent a global recession from occurring, it is also important to prepare for the possibility of a recession. This means taking steps to protect your personal finances and investments, as well as preparing your business for the potential impact of a recession. Some potential steps that individuals and businesses can take to prepare for a recession include: 1. Building up your savings. One of the best ways to prepare for a recession is to build up your savings. This will give you a financial cushion in case of a job loss or other economic setback. 2. Diversifying your investments. Another important step is to diversify your investments. This means investing in a variety of different assets, such as stocks, bonds, and real estate. This can help to reduce your risk in the event of an economic downturn. 3. Reducing your debt. Another important step is to reduce your debt as much as possible. This will help to protect your finances in the event of a job loss or other economic setback. 4. Developing a business continuity plan. If you own a business, it is important to develop a business continuity plan that outlines how your business will operate in the event of a recession. This may involve cutting costs, diversifying your product line, and developing new marketing strategies. In conclusion, while the potential for a global recession is certainly concerning, there are steps that we can take to prevent it from occurring. By addressing the root causes of economic instability and working together to promote a more equitable and sustainable global economy, we can create prosperous for all. Additionally, it is important for individuals and businesses to prepare for the possibility of a recession by building up savings, diversifying investments, reducing debt, and developing a business continuity plan. By taking these steps, we can help to mitigate the impact of a recession and position ourselves for a stronger recovery. It is also important to note that while the current economic landscape may be uncertain, it is not all doom and gloom. With every crisis comes an opportunity for growth and innovation. As we navigate these challenging times, we may discover new ways of doing things, new markets to explore, and new technologies to develop. By embracing these opportunities and working together to build a more resilient global economy, we can ensure that the collapse that will change a generation does not result in a lost generation. However, by understanding the root causes of economic instability, promoting fair trade practices, reducing global debt levels, addressing income inequality, and addressing climate change, we can work together to prevent a global recession from occurring. Additionally, by preparing for the possibility of a recession and embracing new opportunities for growth and innovation, we can position ourselves for a stronger and more resilient future.